Welcome to Module 3, Section 6, where I will talk about a thing called cryptocurrencies.
All the rage these days seems to be cryptocurrencies. The main currency out there being Bitcoin, so that's really what I will focus on, even though there's lots of other cryptocurrencies available. Bitcoin was really kind of the start of this whole thing, and it has kind of an interesting history that I'll go through. I'll also offer some perspectives on things based on what I see in the cryptocurrency markets. So Bitcoin is a digital currency that was created in 2009. It's a new way of looking at money. There were other forerunners, and if you read any books on this, it'll talk about things that happened before Bitcoin, but Bitcoin was the first to really take off, and it's had the most staying power to date. Now there's lots of other cryptocurrencies out there. The real backbone of this whole cryptocurrency mania is Bitcoin. The creator is a mystery, but it's known by the name of Satoshi Nakamoto. This could be a person, some people think it might be, other people think it might be a group, but they've shrouded themselves in secrecy, which also adds to the mystery of this whole thing. Bitcoin was created in order to offer low transaction fees. If you work through a bank, if you work through things like PayPal or Stripe, you're going to pay fees. Well, the Bitcoin people didn't really like that all that much, and they thought, let's be able to buy and sell and have money go back and forth without all of these additional fees being attached. It's also decentralized, where if you work with a bank, that's a centralized location. In fact, the Federal Reserve is the central bank of the United States. The theory behind Bitcoin is there is no central location. So there isn't just one place where everything is being handled. That can be a real advantage in that everything is spread out. That can be a real disadvantage because what if pieces of the puzzle start to break down? Is that going to affect the overall market? Access to the unbanked parts of the world, which surprisingly is about 40% of the world's population. There's over 7 billion people on the planet. About 3 billion of those people don't have a bank account. Using a smartphone or a computer, these people can now take advantage of banking opportunities without actually having a bank account. There's also security and convenience built into the technology. And if you are interested in this, and if you haven't invested yet, please do some research. Please learn what you can about this. Don't just get in because you want to buy at a low price and sell at a high price. And I really come down on that later on. And they want to remove the middleman. That's what pumps up a lot of the prices. That's what makes a lot of things more complicated, is instead of point A and B between the buyer and the seller, you've got this person in the middle, part C, and of course they're tweaking things around to make it the way they wanted to make it, and they're probably charging fees, both going and coming, which adds to overall costs. So I'll go through just a brief history of Bitcoin. On August 18th of 2008, there was a domain name that was registered, and you do that through either GoDaddy or some kind of a web hosting company where you set up a domain name. But bitcoin.org was registered. The only problem is the identity of the person who registered it is not public information, so that adds a little bit more to the mystery. On October 31st of 2008, someone using the name Satoshi Nakamoto released a white paper online, and it was called Bitcoin, a peer-to-peer electronic cash system. So from point A to point B, kind of like the old Napster was back in the old days where you could share music and you can share files back and forth. A lot of the technology came from some of those predecessors, or at least the foundational ideas did. Then on January 3rd of 2009, the first Bitcoin block is mined, and that's called block 0. It's kind of like our dating system where the 21st century is really the 2000s. You have to go back one number. This is also known as the Genesis block. This is when it all started. Then 5 days later in 2009, the first version of Bitcoin software becomes available. A day later, block 1 is mined. So on January 9th of 2009 is when Bitcoin mining starts. So what are some of the characteristics of Bitcoin? It includes that it's a type of cryptocurrency. It's the name that we've come up with to call these things. It's digital rather than physical. You don't have dollars and coins, anything paper or made out of metal. It's all based on ones and zeros on a computer. It's not issued or backed by any bank or government, and some people really like that. They think, wait a minute, we've got dollars out there that is fiat currency. That's not backed by anything except the US government, and we don't even know if we can trust them. We better come up with something different, and we're not going to back it by anything either. Well, at least currencies are backed by laws. Where cryptocurrencies, you don't really know where those laws are coming from, and you're going over international boundaries, and it makes things a lot more complicated. I'm just trying to get both sides here. And it's also made secure by blockchain, which I'll talk about here in a little bit. That's really the technology behind cryptocurrencies. And it's an online public ledger. Just think of it as a big long list. And it's very power hungry. You have to use a lot of electricity and a lot of energy to be able to mine Bitcoins. So it requires massive computing power to maintain the online public ledger. So if you think that you want to become a miner, don't just whip out your old smartphone and say, here, I'm going to town. No, there are monster computers that are dedicated to this, and this is all they do 24/7. Now, a lot of people have gotten kind of smart about this, and instead of worrying about Bitcoin and different cryptocurrencies, they start investing in the companies that put out the equipment that these guys use to mine. A lot of the computer companies and their chips and their memory and their hard drives. A lot of those companies have really gone up nicely in value because you've got all these people trying to mine for Bitcoin, creating opportunities for what we call altcoins. And that could be Doge, that could be Ethereum, a lot of the other coins that are out there. They're virtual currencies other than Bitcoin that are now available to us because they're latching onto the technology and they're starting to implement that. What about the security of Bitcoin? This is what a lot of people were really bothered with at the beginning. Cryptocurrencies use a security method known as keys, and I used to teach about this. I taught security. I talk about public and private keys, and I'll try to give you a really simple example of how this all works because it can be really geeky really fast. You have a public key, and that's a key that anybody can know. So think of it like your ATM card. Anybody can see your card. Anybody can see the number that's on your card. That's a public key. So it's an algorithm that generates a number that anyone can see. People use this number then to send Bitcoins back and forth, and it's freely available out on the internet. You can see it. There's no problem. This is similar to a bank account number or the number of a debit card or even a credit card. Anybody can see that, and you can give that out and not really have to worry about that. Although people have found ways to make you worry about that. Then there's a thing called the private key, and this stays secret. It's non-public, and it does stay as a secret. This is similar to a password or a PIN for a debit card. Even though somebody sees your debit card and they might see the number on your debit card, they don't know your PIN number. That's private, and you can change it. And you're not supposed to tell anybody about that. And you're not supposed to make it something really obvious. Both are needed to complete all transactions. If you ever try using your debit card without the PIN, good luck. If you try using a public key without a private key with cryptocurrencies, it's just not going to happen. You need both. So think about it this way. This is the easiest way that I could explain public and private keys. Let's say you have a safety deposit box at the bank and you want to go because you have something very dear to you that's stored at the bank, or you're going to put something in the bank to make sure that it stays secured. Well, when you go into that secret vault to look at your safety deposit box, there are two keys that are required. There's the public key, which the bank has, and that can be used on any of the safety deposit boxes inside that vault. Then there's the private key that you bring with you, and you have to have both of those keys together in order to open up that safety deposit box. That's very simply the difference between a public key and a private key, and that's how it works. Except with computers, it takes place digitally instead of using physical keys, but we just use those terms because they're a little bit easier to understand. And here's a diagram where over on the left-hand side you have plain text. Let's say you're sending a document to somebody. But you don't want anybody to be able to read this, so you use a public key that does a form of encrypting, and then you have the ciphertext, that's the code right there, and then it gets sent over to the person that has the private key, and that's where it's decrypted or deciphered, and then it just appears to them as plain text. If you ever use HTTPS on the internet, and I hope you do at all times, everything you send back and forth is encrypted. If you use something called a VPN, a virtual private network, one of the real selling points to that is that you have an encrypted tunnel. So that you might be in one part of the world, but you can say that you're in a different part of the world. Or you may have access to information in the US that you wouldn't have if you were basically in Europe or in Africa. That gives us the ability to hide where we are physically located. We do that all the time on the internet. And we don't really realize that because it all happens behind the scenes. And so we just send off an email at our end. Well, there's a couple of encrypting and decrypting processes that take place when you open that email on the other end. It's really kind of amazing how that works and how transparent it is for most of us. We don't even really realize this is what's happening. Now let's talk about miners. Miners are independent individuals and companies, there's companies set up to do this, who use computers to maintain the decentralized ledger called blockchain. So it's a list of all the transactions that have ever taken place. This helps to provide credibility and security. It's not based in one place. It's spread out across multiple individuals and companies. It's also secure because it's heavily encrypted. Miners are paid in Bitcoins. So you can see now why a lot of people want to become miners, because how they get paid off is through Bitcoins, and if the value of Bitcoin goes up, they make a lot of money. And there are a lot of Bitcoin billionaires now. Well, I don't know, Bitcoin's been on real hard times since at the time I record this, and maybe they're just millionaires now, I'm not sure. Bitcoin uses peer-to-peer technology, computer to computer, to make payments. So you can be on your smartphone in Zimbabwe and make a payment to somebody in Connecticut. There is no central location, unlike a bank, unlike something that's a lot easier to trace. Miners receive payments at a declining rate. So there's a whole scale that I'll go through here in just a minute of how they make less and less money, which makes them work even harder and harder to find more. This gives miners a real incentive to work hard and fast. That's why they're burning these things 24/7 and getting the most powerful computers that they can. Bitcoin mining releases Bitcoins into circulation. There's only a set number of Bitcoins out there, and every time they uncover the Holy Grail, which is the next Bitcoin, that's released into the public. And there's only a certain number out there. So how does the mining work? Miners use computers to solve very difficult algorithms. It's like guessing. You're just getting a computer up there guessing, okay, is the answer 001? Nope. 002? Nope. 003? And it goes all the way up to 9,999. It just has to guess one at a time. So it's just spinning these numbers over and over. And if you have a really long set of digits, it could take decades to solve this. And so they have to get really, really powerful computers that can crack these algorithms and this encryption levels, because it's buried really deep. But they have to just burrow their way in to be able to have access to these cryptocurrencies. And they want to be able to discover a new block. Newly discovered blocks are then added to the blockchain. That's one of the drawbacks too. The blockchain keeps getting bigger and bigger as more mining takes place. So miners receive Bitcoins as rewards or payments, which is great if they're worth $80,000 for a Bitcoin. Not so great if they're worth 25 cents. So there's people taking a lot of risk, and they're putting a lot of money on the line to find these coins. They're really banking on the fact that Bitcoin is going to go up in value. In 2009, the block reward was 50 new Bitcoins. Man, imagine what you could do with 50 Bitcoins. You'd be pretty well off right now. This number decreases every 4 years. So there's built-in supply and demand forces that are put into cryptocurrencies. As of January 2018, the reward is 12.5 Bitcoins. That will continue to fall. So mining becomes more difficult as more and more Bitcoins are created. Makes them harder to find. This requires the use of ultra-powerful computers. Currently, the number of Bitcoins is set at 21 million. Why they came up with that number, I don't know. It's not even a Fibonacci number, and it's a prime number, because you can't divide anything into it other than, well, you can't. So Bitcoins can be subdivided into smaller units called Satoshi. Remember that magic name I talked about earlier? Yeah, there's some irony going on here. Even smaller rates are possible by subdividing Bitcoin values even more. So they're getting them down and down and down. That's why somebody can take $50 in a Robinhood account and invest in some of these cryptocurrencies because they've subdivided them so far. So here are some predefined values. You have 1 Satoshi, which is a whole lot of decimal points on the top. I'm just going to let you look at this. I'm not going to try to go through it. But then they go down to 100,000 Satoshi, then 1 million, 10 million, 100 million, all the way up to equal 1 Bitcoin. Whether they're going to subdivide this further or not, they'll probably have to at some point because they're so limited. I mean, 21 million is a lot, but still it's not probably enough. Now I'll talk a little bit about blockchain. It's the underlying technology for cryptocurrencies, and this is, I think, pretty cool. If you talk to me on a personal level, I'm not all that taken with Bitcoin, but I like blockchain technology, and I like a lot of the potential that it has. There are layers of security that's built into this. Yeah, there's some problems, there's some things that have to be figured out, but the basic idea behind this technology, I think, is really cool. So it's a public ledger of all cryptocurrency transactions, and it's digitized, so you don't have it on paper. And there's multiple backups, and they're spread all over the world, so nobody's going to lose this information. It's decentralized. It's not stored in one location. It's spread out. And the ledger is constantly growing as new blocks of transactions are recorded and then added to the ledger. New blocks are added in chronological order. So first come, first serve. The very first block was added first. Then, as new blocks are uncovered, they are immediately added to the ledger. Each computer connected to the network is called a node. It gets a copy of the blockchain. You can go get that and download it, look at it, play around with it. You're not going to do anything because you're dealing with these monster computers that are doing something. And then the ledger is downloaded automatically anytime there's an update. It's a digital ledger stored on a distributed network. It's not made out of paper, and it's stored in many places like a big puzzle that's spread out all over the place. One analogy to help you understand how blockchain works is picture a spreadsheet. Okay, so just a list of information. You might have names and numbers on this spreadsheet. Think of it like a phone book, and it's duplicated thousands of times across a network of computers. Then imagine that this network is designed to regularly update the spreadsheet, and you have a basic understanding of blockchain. And I got this from blockgeeks.com if you want to look at that article. So what is a block? A block records recent transactions. It's just a list of all the buys and sells that happened. Once a block is completed, it becomes part of a permanent database. And it's always there. So you can go back and look at what's happened in the past. Then a new block is generated. The blocks connect like links in a chain, hence the name blockchain. Kind of makes sense, doesn't it? Every block contains a hash or information about the previous block. The entire blockchain or set of blocks has information about users, including balances and transactions. So you can't go back and change things after the fact. Once it's written in the blockchain, it is there forever. Transactions cannot be deleted. Well, I didn't mean to do that. Let's just get rid of that. That builds a lot of integrity into the system. Think of contracts between companies or between people where you commit it using blockchain technology and somebody wants to renege on their agreement. You can't go back and change anything. The data can be distributed but not copied, so it can be spread out across the whole array of different places, but you can't copy it. There is a write-only version. All the others are read-only. As the blockchain grows larger and larger, this can create issues of storage and synchronization. And if you think about that, we have that problem with computer networks. When they're spread out across the entire globe, you update something in the US, and then how long is it going to take to replicate to Africa or to Europe or to Australia? They're running into a bit of that problem with blockchain. As it gets bigger and bigger, if you do a transaction and it's going to take time for that to update, what happens if something else happens before the rest of the ledger has been updated? That is one potential downfall that they need to overcome. This means that each individual piece of data can only have one owner. This is how it looks, and I'll just kind of make some references. I found this online. I obviously didn't draw this myself. Where let's say Jim wants to send money to Mary. So here's Jim. He's the one on the left with the big $sign on the bag there. And Mary's kind of grayed out right now because she doesn't have any money. The transaction is represented online as a block. So it looks like a big Lego there. The block then gets distributed across the network, and see how it's spread out in the bottom left? It's not just stored in one place, it's spread out across the network. Then we go over to the right-hand side. The network verifies the transaction as being valid. So it has to check in all of the different places where it's stored. And there's a lot of algorithms and cyclic redundancy checks and all kinds of different things that you have to do to verify that these numbers are actually correct. There's a lot of technology going on here. The block is then added to the chain, reconciling across the network and creating a permanent record. So you have that one Lego now added to the whole stack of Legos. Jim's record of ownership of the money moves to Mary. Now this could take just a couple of seconds or a nanosecond in order for that to happen. But what's going to happen as this gets bigger and bigger? There could be delays. I used to teach networking as well for Microsoft, and this was one of the big problems that we had to run across is replication. If you create an account in one place and it needs to replicate all across the globe, that can take some time. And anytime there's a delay, things can happen that break down the integrity of what you're trying to do. So how do you acquire Bitcoins? By receiving payments, of course. I have a number of email accounts, and I get a real chuckle out of this, where these people send you these ransom notes, and I know ransomware and these things are kind of in the news these days. They always want to receive their payment in Bitcoins, and it's really hilarious. Because I taught security, I know a lot of these tricks, and I know how to really get these guys to just drive them crazy. I used to do it as a hobby. I really don't. I have other things I have to do now. But you can use them as an alternative to cash, credit cards, or debit cards. The cash is only as secure as your pocket or your wallet or your purse. Credit cards, they can be hacked, and debit cards, they can be lost or stolen too. So there's an added layer of security. And you can get it through earnings, working for a cryptocurrency company that makes payments in Bitcoins. And these are slowly but surely becoming a little bit more accepted. And interest payments. Possess Bitcoins, you can loan them out if you have a Bitcoin. Interest can be charged as a fee that is repaid in Bitcoins, of course. So you can use some of the Bitcoins if you happen to have any and let other people use that, and then you charge interest. And through gambling. Yes, some casinos accept and offer Bitcoins as currency. And there's a lot of different e-commerce transactions that are starting to use more and more Bitcoins. And you can set up a digital wallet online. And I have to admit, I don't know a lot about that, and the technology is constantly improving and changing. So if that's something that really interests you, let me know and I can try to do some more research about that. So information stored in the blockchain includes records of every transaction ever executed from years ago up till a nanosecond ago. Blockchain.info provides access to the entire Bitcoin blockchain. Now, let's talk about some of the risks. And there's an even bigger risk that I see on the horizon that I'll kind of highlight here. Some of the risks are regulatory risks, and these are big. What's going to happen when the federal government decides to get their mitty little paws around this, and they start passing laws that limits what Bitcoin and other cryptocurrencies can and cannot do? What is going to happen if the federal government decides to create their own version of a cryptocurrency? I'm reading about that almost daily now. That could really, really hurt companies like Bitcoin and Doge, which is a joke anyway, and a lot of the different cryptocurrency companies out there. The governments can't handle not being in control, and they're going to fight. And with the current administration that we have in Washington, D.C., they're all about control. Even though a lot of people don't realize that, we're losing more and more freedoms every day. And you don't think they're going to try to get a hold of this. They already have, and they're already working on it. There's also security risks. What happens if part of the network goes down? What happens if there are weaknesses in the technology and the hackers get through? We have to be aware of those things. Bitcoin transactions are permanent and irreversible. That little trip to Tahiti that you made that you probably shouldn't have made with people that you shouldn't have made it with, and you used Bitcoins for some reason to pay for it, that's there forever. So there's some accountability that's built into that, but then we have to exchange that for freedoms that we have. And insurance risks. How do you know that things are going to come through? That everything is going to play out just fine? And then fraud. There's a lot of people out there. Yeah, I'm going to create John Coin. And I've got all this technology behind it. And then right down the street, there's Charlie Coin. And he's going to come up with his own cryptocurrency. See, there's a lot of lookalikes. And then different market risks. And this is the big one right now because Bitcoin and the cryptocurrencies are just flying around all over the place. And I'll show you a chart here in just a moment. And then obsolescence. What happens if somebody builds a better mousetrap and the technology that they're using now becomes obsolete? You know, there was a time when the 8-track tape player was cutting edge technology. You know, Abraham Lincoln was cutting edge technology because he used the telegraph to get information about the Civil War. We laugh about that now, but that's the best technology they had. Where are we going to be 5, 10, 15 years from now as far as technology and the computing power? What happens when IP6 really gets implemented and a lot of the problems that we have now are eliminated? What's that going to unleash? And then the different tax risks. A lot of this goes across multiple international lines. Who are you going to pay your taxes to? What taxes are there going to be? Are there going to be capital gains? Are there going to be sales taxes? What's going to happen with all that? The government is going to get in there and mess around with things. That's guaranteed. It's just how bad are they going to screw this whole thing up? Because they always do. So Bitcoin's price, let's look at this. When I was first approached by this by people that really didn't know what was going on in the market was in December of 2017. And that's when Bitcoin rose. And I paid attention to it before that, but not on a daily basis. Now I'm watching it all the time, even though I don't invest personally. But a Bitcoin rose from about $1,000 in January of 2017 to a high of just under $19,000 in December of 2017. You would not believe the emails I was getting and notes and messages. Hey John, should I get into this? Hey John, blah, 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 blah. I'm like, what? And I looked at some charts and I went, holy moly, this thing really went up. Well, yeah, it started to really attract a lot of the people that have no clue about what they're doing. They just like the idea of being able to make some money. Well, Bitcoin has turned into a mania as individuals seek to make lots of easy money quickly. Now, if you treat this as a hobby, if you're just having some fun with it, that's fine. But most people don't get into this for that. They're looking to make a lot of money quickly with little to no risk. That's really what people want. Well, those people are going to have their lunch handed back to them. If it's even lunch by then, they might just get some crumbs back. And on one hand, I think, yeah, those people deserve to lose their money. But on the other hand, I hate to see anybody lose. So I kind of go back and forth. But the people that really bother me personally are the ones that have no clue about what they're doing, and yet they're throwing all this money into the market trying to make a quick buck. Buy lottery tickets. You probably have more of a chance of winning. So as of July 2021, which is when I'm recording this video, Bitcoin has fallen to a price of just over $30,000 after climbing to $63,000 just a few months ago. Price is determined by supply and demand. There are markets where these things trade and you've got prices going up and prices going down. You've got Elon Musk saying this and all these different companies saying that and different countries that are going to adopt Bitcoin and cryptocurrencies, and the prices are just flying all over the place. But right now, as I record this, Bitcoin is having a lot of trouble. It still may get better, but it could also get a lot worse, and I'll show you what I'm talking about. Price is also dependent on the size of its mining network. These guys are just churning things out, and we need the mining network to be big. We have to have new coins being discovered to create that additional supply and demand. The larger the network is, the more difficult and costly it will be to produce new Bitcoins. The price of a Bitcoin must rise as the costs of the production increase. There's a lot of people spending millions of dollars every month just to mine these things, and they have a break-even point before they even start to make any money. And then mining power more than tripled back in 2017. It's even greater than that now, and I have a quote that I'll bring up. So they're really power hungry with the mining. In May of 2021, I ran across this in the Harvard Business Review, and I just quoted this. According to the Cambridge Center for Alternative Finance, or CCAF, Bitcoin currently consumes around 110 terawatt hours per year. Now, because you know what a terabyte is, that's the size of a hard drive that you can have now. A few years ago, nobody knew what tera meant. What comes after tera? You can ask yourself that question too. But it's about 0.55% of global electricity production. So just about 0.5%, or roughly equivalent to the annual energy draw of small countries like Malaysia or Sweden. And it gets kind of cold in Sweden, so they have to have the lights on quite a bit. So they're sucking down a lot of power. There's a lot of environmentalists out there saying, we want green this, green that. We want to change everything. We want to do away with fossil fuels. And we've got a bunch of miners who are reliant upon electricity that is largely fossil fuel based. There's a real contradiction. There's a real struggle going on between one side and the other. A lot of the people that are really promoting things like the Green New Deal, even though it has nothing to do with being green and it's not new, and believe me, it's not a deal. People think that it's going to make a better world. Well, they also think cryptocurrencies are going to make it a better world. Who's going to win? Are we going to rely on nuclear energy? Are we going to rely on other forms of energy? Right now, the infrastructure is not designed for that. So there's going to have to be some massive changes that take place. So there's a real war that's going to come to a head at one point of how are we going to even uncover these coins. So let's look at this chart here. This goes back 4 years, way over on the left hand side. You see where it's down around between $3,000 and $4,000. And then over when you see that little bump, and I'll try to outline these, back in late 2017 when it bumped all the way up over to about almost 19,000 for Bitcoin. That's when the first wave of people started really contacting me going, oh man, what should I do? You ever heard of this? What do you think about it? And I'm like, no, stay out. This is unproven territory here. And you don't know anything about this. You have no business throwing money into it. Well, I turned out to be right. And for about 3 years or so, it just staggered. It came down to 7,000, 9,000. And you had all the get-rich-quick folks out there touting the wonders of this technology. And a lot of those people were made out to be ultra fools. Well, then we had the whole COVID-19 pandemic. And that was a real game changer, especially for cryptocurrencies, where you had things really start to pump up. And then in the year 2021, as the economy's trying to recover, it just shot all the way up over $63,000. Well, that was in spring of 2021, and I'm recording this in summer of 2021, and we've fallen down now, and we're in danger of dropping below 30,000. Now, that may sound like a lot, but if you got in at 60,000 and you're down at 30,000, there are people that got in at the very top thinking it was going to 100. Every day I'm in chat rooms and I cannot believe the lack of education and the lack of understanding of what's really going on. I don't post anything. I just follow along. I'm just reading other people's comments. And it is just amazing to me. Somebody comes in and says, so, is Bitcoin going up or down today? I need some help. And somebody says up, and they're like, okay, thank you. I mean, that's what they're using for advice. You never rely on a chat room. Those should be entertainment only. Now, if you're in some kind of a club or some kind of a membership program like I have that you pay for, and we're giving you the best information that is available that I know how to give, that's one thing. But this is a free chat room. Earlier in the year, there was the whole Reddit craze with GameStop and a lot of the different stocks that were heavily shorted. And I have videos that I talk about that whole process and what went on. But you've got so many people that have no clue what they're doing. And they rationalize it by saying, oh, I'm just taking, I took $20, I'm just going to throw it in there, open up an account at Robinhood and just going to see what happens. No, you're not. You're hoping to get rich from this thing. Be honest with yourself. Very few people are willing to do that. There is that greedy side of us. There is that American attitude that has been lost, that is based on hard work, sacrifice, and determination. And it's been replaced by the easy way to get things without even working. And that's what people are really trying to do. It happened back in 2000 with the dot-com boom and bust. It happened in 2007, 2008 with the housing crisis. It happened in 2012 with gold. And now it's happening with cryptocurrencies. This is a massive bubble and it's going to pop. After the bubble pops, sadly, and after a lot of people are hurt, if the technology still looks sound, personally, that's when I'll get a little bit interested in this. You don't have to be at the cutting edge. You don't have to be on the ground floor. The good investments will stay good investments. And if you really pay attention to what's going on, you'll be in the know with what's a good investment and what's a bad investment. That's just my opinion. I'm not saying that's gospel fact. That's just where I come out. And some of you may disagree with that. And that's cool. Feel free. I'm just trying to throw some information at you to either let you justify the opinions that you have, or maybe to make you think about things that you might not have thought of before. Because look at this next chart. This is what we call a massive head and shoulders chart pattern, which is one of the most reliable chart patterns available. I look at things by looking at charts. A head and shoulders pattern is very dangerous. Now, I'm not big into patterns. You got the rising wedge and the bearish this and the bullish that. A lot of that's just bunk. Okay, and a lot of the Elliott wave theory. Yes, I know some of you are listening to this and you're big Elliott wave people. It's too subjective. You have to put your own interpretation into things, and 99% of the time you're going to be wrong. And any chart can be drawn in hindsight and come out perfect. What we want to do is look forward, and I'm looking at what I see here, and there's even head and shoulders inside of head and shoulders here. The thing to watch out for as I record this in July of 2021, and I'll keep this video up so people can go back and see if I was right or I was wrong. I'm not necessarily making a prediction. I'm just going based on what I see. That if we break down below 30,200, which you can see in one spot, we came all the way down to that point. We went back up and now we came back down. That is the formation of a shoulder. The very top is the head. And we've been breaking down below different head and shoulders within other head and shoulders patterns. And if we get all the way over to the right hand side and we, on a closing basis, if we drop below 30.2, it is going to be bloodshed. Because there's millions of stop loss orders. There are millions of people out there waiting to see if we drop below that, they're going to hit the sell trigger faster than you can even blink. And this thing is just going to tank after that. Now that's what I see based on the charts. Is that what's going to happen? I don't know. That's just what I see. And I've been watching this for a long time now. I'm not an active participant, but I'm an active observer. And I'm watching this all the time. This is just what I've concluded. I hope I'm wrong. I don't want to see people wiped out. I don't want to see a good technology go to waste. Looking at the chart, we've got to go with what we see. And a head and shoulders topping pattern is one of the most reliable patterns there are. And I don't even like patterns. So be aware of that. This is the chart that I brought up in the video that I posted near the end of July. As I record this, it is August 1st, 2021. Compare this chart with the chart that you see in the previous video. And I said that if 3,200 is broken on a closing basis, it could get very ugly for those who are long. And that pretty much happened. We came right down to that level. Over on the right-hand side, we dropped down to that level. I thought we were going to go even lower, but we were able to stay above a lot of the stop losses and a lot of the people who have sold puts and a lot of the people that would be in real danger, and we were able to push back up over that. What's interesting is we've bounced up out of that, And this chart is an end of day chart, and it's based on the index. And this is as of Friday's close. There's another chart that I'll show you right after this that trades over the weekend. And as I record this, it is about 10 a.m. Sunday morning, August 1st, West Coast time. So there's still all of Sunday, Sunday night, and into Monday to go after I record what I have to say in this video. So things could really begin to happen. Even though we dropped a little bit below it on a closing basis, we were able to hold that support level and then bounce out of it. Now it's going to be interesting to see where do we go from here, because we're working our way through what is called a head and shoulders topping pattern, which is a very reliable pattern. I'm not a big pattern person, but this one is just so blatant and so right in your face, I felt I had to say something about it. So let's look at this next chart. This is updated as of just before I started recording. This is a 10-minute chart. So each one of these bars, if it's red, it's down. If it's green, it's up. But each one of these bars is 10 minutes long. An interesting thing happened from Friday's close until Sunday that hasn't even been picked up on the chart that I just showed you. Look over on the right-hand side. What I did is I measured what's called a Fibonacci retracement. I went way back to the highs that were made in about the middle of May. I drew a line all the way down to the bottom, which we met just about a week ago. And then you see these red lines going across. Those are called Fibonacci retracement levels. And when I initially was going to do this video, I thought, oh, look at this. We've come right up to the 38.2 retracement level, but we're having a hard time getting through that. That is significant overhead resistance. And if you look back into the 14th of June, in that week or so, you can see where we hit that area again. Not only are we dealing with a Fibonacci level, but we're also dealing with previous resistance. Well, then look what happened way over on the right-hand side. From Friday night into Saturday and then into Sunday, we were able to break above that 38.2% level, and now we're trading above it. And once you break through overhead resistance and you come back down, that now becomes support. So this could be quite positive. We'll have to see if these levels maintain. The problem is you have a lot of crypto traders out there who have no clue what this even means. So they're not necessarily looking at this. This is what I'm seeing in a market that I don't even trade. So just be aware of that. The 41,000 level is pretty critical right now. Can we stay above that, or are we going to drop down below it? It's going to be interesting to see how things trade once things open Monday in the US session, to see if prices are able to go above 41 or if we take out the support and then begin to fall back down. If we go back down under support, there's a lot of stop loss orders at that level, and that could really have a significant influence. Just like I thought once we broke the 30,200 level, we did. We closed below that, but a lot of stop loss orders and things didn't kick in. So there's a lot of other forces going on right now that you generally don't see in the markets. What I plan to do is I will make updates to this video as I see them to be needed. Because, like I said, I'm just doing this for the benefit of people that are interested in cryptocurrencies. This is nothing that I actually trade in myself.
For the sake of the class, I wanted to do another update to this section, and that is October of 2021. I purposely kept the other videos in before this, just to show you how I analyze things. This update is not because of anything I'm seeing. This is for the sake of the course. Usually what I do, even with the S&P 500, is I usually don't bring up things unless something is actually happening. When I did the first update, we were hitting support. Well, we were able to hold that support. Then a week later, I did another update. We were dealing with resistance. Well, we were able to break through that resistance. Here on this chart, we've had a pretty nice run after falling back. That's in spite of some negative news. What we see now as potential resistance is above us. I drew some light red lines at the 53.7 level, as well as at the 58 level, the 59 level, and then of course the all-time high at 63.2. It's kind of interesting that a lot of these levels are round numbers. That also indicates to me that these are people that don't really know what they're doing. They want to buy at 34,000 and sell at 78,000. They like round numbers, where typically what you'll find over a period of time, if you're looking to get in at a price or out at a price, you don't put it at a whole number. So we tend to see a lot of action in Bitcoin around whole numbers. The next chart is a 60-minute chart instead of a 10-minute chart that I used before. I was running out of space. I couldn't go back far enough. What I have on this chart is the Fibonacci retracement levels. There's an arrow where I did the very first video, and that's because we were right at support at that time. I thought we were going to break below that. I followed the chart instead of what I thought might happen. Things ended up finding some support and then bouncing up out of that. Then I did the second video about a week later where we were dealing with the 38.2 retracement. We bounced back down from that, but then we're able to find some support and then break through that. The next level was the 50% level, and we stayed right around that level for a while. We were able to get some buying power involved, and that pushed us all the way up to 61.8. When that level, and even a little above that level, did not hold, you can see prices really broke down. And everybody thought, we're going to zero now. Well, we found some support. We were able to go back up, and then we dropped down again to the 38.2 level, found some support there, and have seen a really nice run up out of that level. Right now, we're around 54.7.
Bitcoin potential. Bitcoin supporters believe that digital currency is of the future, and that's true. I like it. I like the technology. I think it's wonderful. It has the potential of facilitating a much faster, no-fee payment system for worldwide transactions. On one hand, there's a lot of companies that could be put out of business by not having that fee in place. But this could also make things cheaper, and you get to keep more of what you make, or what you spend actually buys more. And you can do this all over the world. The foundation being developed can be used for other industries, and this is where I really like it. Smart contracts based on blockchain technology could be really cool. It could really add a lot of integrity to business contracts that are out there. Also, copyrights and artistic authentication. If you write a song, if you write a book, you can use blockchain technology to copyright that, so nobody can steal it from you. And they can't go in and change things after the fact. That could be really neat. And then for purchases, and this is what we mainly think of Bitcoin, to buy and sell things. And vehicle registrations. You know, that used car that you bought and you're not quite sure what kind of a history it's had, or how many owners it's had in the past, or if the used car dealer is really telling you the truth. Hey, this kind of technology could let you know what really happened. And then weapons registration. Okay, I know we've got a big Second Amendment fight in the US, but how much more integrity could be added by using blockchain technology to register weapons? And then medical records. Would you like to be able to keep your medical records absolutely secure? Bitcoin has the potential of allowing you to keep that ultra safe. And then voting. What do you know? Yes, none of this garbage of throwing things through the US mail. We could set up voting systems where we know that we can have faith in our voting system in the US, which really came under attack in the 2020 election. Some people think something kind of shaky went on. Other people said, no, my guy won, so naturally everything was fine. But the problem is, pretty much everybody was shaken. They don't have as much faith in the voting system. And what if you had more turnout? You don't have to go to a place. You could do this on your smartphone, and you're using ultra-safe technology to do this. That builds integrity into the system, and now we know when we get the results faster and more accurate, and we know we can trust them, we have more faith in our voting system. And then the goal is to remove the middleman. We want to get all these people that are in the middle making money, making things more complicated, making things a lot more difficult. We want to get rid of those people.
This concludes Module 3, Section 6, and I'll pick it up again in Section 7.